Well, hello and welcome, everyone. I'm Jeff Hall, a partner and senior advisor at Rather Kittrell here in Knoxville, Tennessee. And I speak for our entire firm when I say we're grateful that you've joined us today to hear how over the past 2 decades, our clients have transformed Rather Kittrell into the wealth management firm it is today. Before we get started, I'd like to introduce our 2 co-founders, Lytle Rather and Chris Kittrell.
Thanks, Jeff. Happy to be here and look forward to going through the presentation.
Hi, this is Chris Kittrell. As Lytle stated, just happy to be here and looking forward to just explaining exactly what we do and really why we do it.
As Chris and Lytle mentioned, today we're going to talk about that experience at our firm and how it differs from the typical approach found in the financial services industry today. But first, a little look at Rather Kittrell. We were founded in May of 2000. We have around 32 employees today, including 9 certified financial planners, and that's really important because financial planning is at the core of what we do. Over 750 families served and over 100 corporate 401k retirement plans here in the Southeast and around the country. So today, Lytle's going to be joining us. He has over 30 years of experience in the financial services industry, and also our co-founder, Chris Kittrell, has joined us today, and he spent 25 years in financial services. And as the first employee here at Rather Kittrell, I'm fortunate to say that I've been doing this now for over 20 years. And so we're very grateful that you're with us today, and we'll talk a little bit more about the experience here at Rather Kittrell. And to get started, Lytle, there's a lot of words on this page. And when you look at these words, tell me what comes to mind.
Well, Jeff, doing this for as long as I have and really concentrating on financial planning and wealth management, you're going to see a lot of words up here that pertain to that part of the business. 401k investing, charitable giving. How do I start a college fund? How should my money be invested? But you're also going to see words like confusion and fear and peace of mind. And I think when it's all said and done, we believe if we're doing what we need to be doing on the financial planning part of our engagement with clients, they will get through the confusion and the fear, and we will ultimately help them gain a peace of mind around their finances. To expand a little bit further on the why, why do people come to see us? Why are they seeking help? There's a lot of ways that we can help with investment management, tax mitigation, estate planning, asset protection, charitable giving, 401k management. You can see that in the lower left-hand part of this slide. But what we believe is really important is what's the why around all of those areas that we can help. And on the right, you can see there's an intersection between your money, your finances, and your life. And we believe where that crossover is where real financial planning takes place. And your life and what's going on with you and your season of life, we think is most important. And I'm going to let Chris expand a little bit on that, how we really want to go deeper than just the financial planning part of what we do.
Yeah, that question on the top right, what's most important to you about money? I think that's really where we stop, and just asking people to stop for a moment, think about that, really engage with that question. And then the iceberg illustration is what we hear from clients a lot of times, because the industry and really Wall Street in general wants to talk a lot about the techniques and the strategies and the tools and methods, which are absolutely important. That's the how. What's underneath that waterline and that represents the majority of the iceberg is the why. Why are you doing what you're doing? What's most important to you? And that really falls in those categories of your values, your goals, your aspirations, in your desired legacy. So we want to spend time with each client and pull that why out, so then we can enter into the how, which again are those techniques and strategies and tools and methods. But it starts with the why and helps us answer that question of what's most important to you about your money.
And this illustration, Chris, is really indicative of how we view client relationships. There's the 10% that's above the water, but then there's the 90% below the water. And those are the deeper issues that matter just as much, if not more. With that said, we're going to hear some client stories. And Chris, the first of which are some clients of yours that went through a very emotional process of selling a business.
When I think back to somebody specifically and think back to a transition, the ones that probably intrigue me the most are the ones that they've spent their entire lives working to build a business. And then they reach this point of either transitioning to other family members or even selling that business. and what an emotional decision that can be. And they need somebody that really will listen and help them with that. I think back to a couple that spent their entire lives building a business, doing what a lot of us do. We hear all the time, you've got to save money, you've got to prepare, you've got to plan, and they did an incredible job with it. And then they hit that point of transitioning into retirement. It's tough to go from accumulation to then distribution, then spending what they had saved. And really they needed almost permission to then spend their money to live their lives. And then to be able to build a plan that showed them they were on track, that they were going to be okay. That is one of the most rewarding experiences we get to see, to be part of that.
So we see situations like this all the time. Life is full of transitions. They all involve money and most are complicated. And so the next video demonstrates the need for having a plan and really connecting someone's investment risk with their life goals.
When I think about helping our clients, we have found that a lot of people that come to us are in the midst of or close to a transition, whether it be retirement, spouse passing away, changing careers. As I think back about a specific instance, a client was referred to us. He was getting ready to retire. He had his money invested in such a way that he thought was too aggressive. And so he went back to the people that he was working with and said, I just feel like I'm too aggressive. I'm getting ready to go through this transition of retirement. They lowered his risk by really just a guess. They lowered it from being this risky to this risky. And my question was, well, what if you could do all you want to do and only take this much risk? So he came into the office and we asked a lot of questions and we really found out what he wanted to do. We understood what he wanted his money to accomplish. And in doing so, we were able to design a plan that was taking the appropriate amount of risk for him to be able to do that. And it turned out the plan that we built took his risk from here to here. This was in late 2007. And as we all remember, 2008 into 2009, the stock market went down 57%. He had a lot less money exposed to the market, not because we were trying to guess the market or we thought it was going down. What we did was a plan in advance of that. And when it happened, he was able to stick with that plan. He was able to stay retired. He was still able to travel. He was still able to do all those things that he wanted to do because we had intentionally built the plan the way that we built it.
Both of those videos represent powerful stories that center around life transitions, and more than likely there are elements of those stories that you can see yourself in. We're going to talk a little bit about also something that I believe you will see yourself in, which are our clients' 5 key concerns.
And Chris, we have deep, meaningful conversations with our clients. And even though the questions that we ask have evolved over the last 2 decades, getting to the heart of the matter has always been the most important part of serving our clients well. And we want to talk about those 5 key concerns that we've uncovered over 20 years and address as a result of literally thousands of client conversations. Lionel, the first key concern is wealth preservation. Talk a little bit about what that means.
Thanks, Jeff. Yeah, when we ask our clients what is most important to them, this is the one that comes up the most, and that is making certain that investments are aligned with what's most important to you so you have a really high probability of having money left over at the end of your plan. And I believe starting here is a great way for us to get to know our clients' why. What does their retirement look like? What does their life look like with their money? And to be able to build a plan around that to give them that peace of mind to know that they can do all that is important to them and have a really high probability of not outliving their assets. And Chris, with the wealth preservation and building a plan that allows our clients to align what's most important to them with their investments, taxes are really an important part of that analysis. And I know that that's an important part that you want to talk to clients about, and how reducing income tax can really make a huge difference as our clients move through retirement.
Yeah, that next key concern after wealth preservation is wealth enhancement. That's tax mitigation and cash flow planning, which I jokingly tell people cash flow planning is a fancy way for budgeting. So we do want to name every dollar and know where that's going. But just as important is tax mitigation, because it's you can make a lot of money, but really it depends on how much are you keeping and can you avoid certain taxes. With the legislation currently being proposed, as we sit here today in early 2021, that's going to become more and more important to clients, and really looking at the different income tax laws and how they can manage their investment portfolio and their financial plan to hopefully make their money work as well as it can, but also avoid any unnecessary taxes that they can as well.
And Chris, you talked a lot about taxes, and taxes are a significant part of wealth enhancement. Wealth transfer is the third key concern, and taxes are inevitably a part of this conversation as well. However, the discussions around wealth transfer go so much deeper. The most important question shouldn't be how much in taxes can we save, but instead, how will these decisions affect my heirs? What's the best thing that could happen? How likely is that to occur? Alternatively, what's the worst thing that could happen, and how likely would that be? Sometimes these are very difficult questions, and a good method to aid in this process are what we call the 6 T's. Transfer. Who are we going to transfer our wealth to? Number 2 is treatment. How are we going to treat them? The timing. When will the heirs receive the wealth? Now or deferred or over time? Title. When do I transfer the title or ownership of these different assets? And then we get to the tools and techniques, which I think is where a lot of people like to begin this discussion, and that really comes towards the end of the discussion. And then finally, the 6th T is the talk. Have we talked to the individuals about the wealth that they can expect to receive? Frankly, the smaller the gap between an heir's expectation and the actual inheritance, the healthier that transition will be down the road. And Lytle, there's a natural relationship between wealth transfer and wealth protection. Talk a little bit about that relationship and what wealth protection means.
When you're talking about wealth transfer, a lot of times you're talking about protecting your assets by setting up trusts either during your life or at death. And wealth protection is really about protecting assets from a catastrophic loss, from potential creditors, ex-spouses, children's spouses, and seen here locally, identity thieves. It happens quite a bit. So we really want to look at all the ways that we can protect our clients' assets from, should we insure long-term care, disability, life insurance, even property and casualty, making sure that umbrella policies are in place. And also just entity planning. If you've got a vacation home or you own multiple businesses, should those be incorporated or be in an LLC? So protecting our wealth along the way is really important, and it's something that we want to identify to prevent some of these unknown events that could occur and could really jeopardize our plan.
And the final key concern that we've identified for most of our clients is charitable giving. And I think this is one of the most satisfying and fulfilling parts of our job. Many of our clients have causes and organizations they're passionate about, and uncovering what these are really takes that relationship to a new level. And when we've helped a client identify and plan for their financial finish lines, all of a sudden they realize they may have more money to support those causes that they care about. But it's not always about the money. I came across an acronym last year, LIFE, L-I-F-E, and it really identifies the areas where we can be charitable with different parts of our lives. First, the L is labor, I is influence, F is finances. And again, I think a lot of the financial services industry wants to focus just on the finances. And then finally, E is experience. So those are the 4 areas of life where we have to give and share with others in our community. When work becomes optional for someone, they typically don't just have money, they also have time to share, they have social capital to leverage to help others, and years of work experience that can really be put to good use. Bringing all this together, Lytle, there's a lot we've covered. There's a lot of information. There's a lot of things that we cover with our clients. Talk a little bit about our consultative process.
With all the things that we want to address with our clients, we have a very robust and specific consultative process where we really want to take our clients from what we call a discovery meeting, and we want to find out quite a bit about our clients to be able to develop an investment plan. Along with that investment plan, we want an investment policy statement, which we'll talk a little bit about that here in just a minute. Once we have presented the plan, we want to have our clients have the space and the time to decide if they want to move forward. And if that's the case, we'll do a mutual commitment meeting. And once the client has engaged us, we will then start working on some of those advanced topics that we just talked about, and then set up our regular progress meeting. I think the most important thing about this page is it's very comprehensive. It is something that we do without fail for our clients, and it is something that we believe really helps keep everybody on track as we work through all the different areas of the financial plan. And the first meeting is called a discovery meeting, and we're going to ask 50 questions around a lot of different areas, and it's not just finances. You've heard Jeff say that several times. Most people in our industry want to start with the financial, and we believe it's a lot more important than that, and really finding out about values, finding out about goals, finding out about your most important relationships, what you're interested in, even down to how often you want to meet. How do you like to be engaged when you're working with someone? And so as we're doing the discovery meeting, what's going to come out of that is an investment plan. I know Chris has a real passion about the total client profile, which is what the result is from our discovery meeting, and it's where we talk about all those different areas.
As we ask you the questions in the discovery meeting, we take notes around these different categories, which are, as you can see, there's 7 main blocks. There are values and goals, relationships, interests, process, advisors, and your assets. And what comes out of that meeting is just very, very, very powerful. And this is an example, but under values, you'll notice that freedom and peace of mind, security, and the ability to help others are what's driving this particular couple. And this aids in how you're going to invest your money, and also with a sense of accountability. Are you truly doing what you're saying is most important to you in regard to your values, and more specifically, as we pull those goals out of these conversations? So I think the total client profile in this type of format is one of the most powerful things that we provide our clients, and it's something that we continue to start each progress meeting with, whether that's every 6 months, every quarter, every year, and it does evolve and change just like all of our lives evolve and change.
Yeah, Chris, I think that's really good. Those values in the upper right-hand corner, those tend to be evergreen issues where you mentioned things on the page will change and we need to update it, and that's true. But when we go back to look at what's really important to our clients about money, the freedom, the peace of mind, the security, those tend to stay constant throughout their lives. And we always want to use that as a foil to put every decision that we're going to help them make against those values and make sure that it's in alignment. And the investment plan meeting is really the first step after the discovery meeting, and it's really the presentation of the roadmap of where you are and where you want to go and how we're going to build a plan to get you there. And in one of the videos we saw about why should we invest a certain way, and for us it's most important to invest where the risk we're taking in our portfolio is aligned with each of our clients' unique goals, objectives, and lives. So once we have that portfolio in place, we want to make sure that we keep the portfolio where it is. And Chris has mentioned tax changes. We have the same issues that we've had a lot of times, political and economic, and all kinds of challenges we face every day. But the investment policy statement is how we make certain that despite everything going on in the world, we have a very intentional and disciplined way to make changes to the portfolio. It's very unemotional, and that we don't have to be able to predict the future or understand what's going to happen with any given event. If assets and our investments move one way or the other, too much, we're going to make adjustments. And we talked about the mutual commitment meeting. When a client does want to engage us, this is a meeting that's mainly administrative, but it really allows us to introduce our firm and our team and who's going to be taking care of our clients as they begin to work with us. And then we really want to determine how often we need to meet to check in to see if anything has changed. At these meetings, we'll definitely measure progress towards goals as far as the investments and retirement, but as important, we're going to identify those gaps that could jeopardize the plan. And so the mutual commitment meeting, once a client has engaged us to help them with a plan, this is where we want to get together, introduce the team, and really be able to start creating that relationship for who's going to help with the financial plan moving forward. And you can see at this point, we will start to work on the advanced plan. And that's just the evaluation of all the areas beyond investments that we really want to address and make sure that those don't jeopardize the plan. And then the regular progress meeting, that's where we're going to see if anything has changed, opportunity to measure goals from how are we invested and what are we trying to do with our money. But as important, that advanced plan comes in where we've identified some gaps that could potentially cause the plan to get knocked off track, and we want to make sure we address those.
We've gone through key concerns that we see clients have. We've gone through our wealth management and financial planning process, and we would ask you really next steps or questions for you to consider. What's most important to you about your wealth? And that's you, your spouse, your significant other, your family. Where do you see your future you, not only later this year, but in 5 years and in 20 years? Do you have a plan to get there? That's probably the thing that we hear the most as we sit with clients. I just want a plan. I need a plan. Can you help me with a plan? And that's really number 4. How can we help? That's how we help. That's something that we're truly passionate about. That's a big part of our why as a firm and the individuals that make up this firm. And the next video that we're going to watch, I think, really illustrates that passion and that why. And this is a partner of the firm, Tim Eichhorn.
I am a financial advisor very simply because someone showed me a long time ago what it meant to plan. I was 17 when my mom died. 5 weeks later, my dad died. About 4 months later, my aunt told us that the house was ours. That was me and 2 younger brothers. And we said, well, sure, the house is ours. Absolutely, we live in it, we grew up in it. But no, you don't understand. The bank doesn't own the house. Your dad had paid it off. So that was a pretty cool explanation of what planning was. Fast forward, an economics degree, time in the Marine Corps, a couple of stops along the career path, and a wealth of life experience. And here I am, working with families to plan for what they can't see coming and plan for the events that come down the road in life. And it's a lot of fun. It's about relationships, and I'd rather do that than pretty much anything else.
You can see in that video from Tim that he went through a major life transition early in his life, and the passion he has to help his clients go through similar transitions and then all the different transitions. And that's something that we're all passionate about. We've built the firm to really be able to help our clients move through these transitions. They can be complex, they can be very emotional, and there's a lot of collaboration needed to be able to do that. And we think our process lends itself to all of those. So we're here to help, and just reach out if you need us.